What's going to happen to the market? Are prices going to be at a 20 to 50% discount in 2023 within the Toronto real estate market? Detached properties within the GTA going to make a healthy recovery, break through peak prices of early 2022? Is there going to be a massive recession? I often get asked these questions by my sellers and my buyers as a Toronto real estate agent working within the Toronto real estate market and the GTA real estate market. And while my job is not to predict the future with regards to what's going to happen, I can make certain educated guesses and point towards key items and categories that will help us better understand what may happen in the future. And that is what we are going to talk about in today's video. Let's get to it. Hello everyone, this is Sam from SaberiSixRealEstate and Remax Realtor and Realtor Inc. As always, back with another video for you guys here today. If you're new to the channel, my name is Sam. I work within the Toronto real estate market and the GTA real estate market, representing buyers and sellers. On this channel, we like to discuss all things Toronto real estate content oriented, market stats, market trends, market facts, news items, building reviews, buyer advice, seller advice, things to avoid, best practices, and so much more. So as always, you can find my contact information on the screen and in the description box. Feel free to get in touch with any questions you may have with regards to topics covered in this video or topics covered in previous videos, or if you have any general inquiries with regards to the Toronto/GTA real estate market. Anyways, enough of all of that. Let's get to the point of today's video, which is where is the market headed? Where is the Toronto real estate market going to be at in 2023, 2024? Are we going to face a massive crash? Are the buyers waiting on the sidelines, timing the market perfectly, going to regret not buying now because it's going to be the exact opposite? We're going to go on another bull market run. And honestly, these are the two prevailing theories out there. I mean, there's very little room for nuance, which is something I try to bring onto this platform and this space of Toronto real estate market. Furthermore, obviously, naturally, my clients always ask me about the future, and I understand why they think that's part of my job. And to a certain extent, it is part of my job, but a very small part of my job. Out of the 8 to 12 things I would say a professional, competent, qualified, trusted professional real estate agent actually does, predicting the future, predicting market trends, predicting prices would probably be on the end of the list. Seeing as to how this is a question I get asked often, I thought, why not answer it? And the answer is quite simple. Unfortunately, hate to let you down, sometimes the answer to the biggest questions in life are the simplest. There's no need to overly complicate it for the sake of sophistication. What matters more than complexity is just the accuracy. That is what's more important. And what is this simple answer to the question of where the Toronto real estate market and the GTA real estate market will be headed for the rest of 2022 and 2023? Well, it has to do with two main trends. As simple as that. What are those trends? The rate of inflation and how central banks react to inflation with interest rates. Looking at how things have worked thus far will help us focus on these two key trends to see where the future is headed. When the Toronto real estate market and the GTA real estate market with regards to Toronto condos, Toronto detached, Richmond Hill condos, Durham detached, semis in Mississauga, any and every property type you can think of was on an absolute tear and hot market early in 2022, mainly February of 2022 for freehold properties, and more so March of 2022 for condominium properties. Interest rates were at all-time lows. Of course, this in combination in conjunction with the fact that there is a housing-starved buyer base out there facing limited supply causes a hot bull market where properties are going $200,000 to $300,000 above asking, getting 13 offers. Benchmark prices in any given sub-community is changing on a weekly basis. You can say a overly inflated real estate sector within the Toronto real estate market and the GTA real estate market, and really Ontario at large. Well, the Toronto real estate market and the GTA real estate market is no longer in those hot conditions. It has substantially cooled since that point in time, mainly due to the fact that the Bank of Canada has hiked interest rates from the historical lows several times, to the point wherein now average prices across the GTA are not only lower than peak market conditions in February, but also lower year over year. That's right. We actually talked about this in my previous video, but let's review quickly. Right now, the average property price across all property types across all areas within the GTA real estate market is $1,086,000, the most recent complete month we have access to. Well, the $1,086,000 figure is, as you can see, 4% down year over year from September of 2021. But more than it being down year over year, it's far, far below where it was in February, where the same exact figure, the average sold price across all property types, was at 1.299. And this has to do with the fact that the Bank of Canada has increased interest rates since peak market conditions up to the recording of this video. And here you can see on the screen the installments of the rate hikes by the Bank of Canada. But why has the Bank of Canada increased rates? The Bank of Canada is not raising rates in a vacuum. What the Bank of Canada and other central banks do, such as the Fed, in terms of their policy with regards to interest rates, is mainly contingent upon the rate of inflation. That's right. Central banks, such as the Bank of Canada and the Fed, raise interest rates to combat and battle inflation, where as of the most recent CPI is around 7 to 8%. So what does this all mean? And how does this help predict the future? Which, as I said, is not my job, nor should you try to. What is going to happen with regards to the Toronto/GTA real estate market going forward will have to do with these two items. Interest rates as caused by inflation primarily. If we see the rate of inflation trend towards more healthier and healthier levels, or stay around the same plateaued area, or hold water around the same range, most likely what we will see is a more relaxed approach by the central banks, namely in this case the Bank of Canada, toward their interest rate hikes. Not to say that they won't continue to hike rates, but maybe by less basis points, maybe by 0.25, a 0.5, and maybe less installments, more spread out. And if the Bank of Canada starts to take a more relaxed approach due to healthier inflation rates, then the waiting game that I have been establishing thus far on this channel between buyers and sellers, in my professional opinion, will be over. Once there is a consensus and clear message on the behalf of central banks regarding how many more rate hikes and what their general attitude towards monetary policy is, then we will see a return to a very active market. Now, this is a key point. Do not confuse an active market with a bull market. When I say the market will get healthier again or become more active, people just focus on price. Prices will not return to early 2022 levels, in my opinion, for a while. But certainly, if there is a more clear message communicated by the Bank of Canada, as once again indicated primarily about where the inflation is, I do foresee the waiting game being over. That means more active listings onto the market, more inventory onto the market, more sellers willing to sell at reasonable prices. And on the other side of things, more buyers submitting offers and more buyers starting the process. Because right now the market is confused. Buyers don't know what to do. Buyers are trying to perfectly time the bottom of the market. Sellers are trying to hold steady, leading to a lot of inactivity. Simply put, the future with regards to the Toronto real estate market in 2023 primarily depends on interest rates as influenced by inflation, when everything settles with regards to a clear and concise message to the public about what the future plans are. Anyways, let me know if you have any further questions. This is Sam from SaberiSixRealEstate and Remax Wiltron Realty Inc. As always, feel free to subscribe for more. You can find my contact information on the screen and in the description box. Thank you very much for watching. Stay safe and stay tuned. Thank you.